So in this video, I'm going to be going over every single one of my favorite golden pocket setups of this week. There's only been a couple ones of them. It's been three, if I believe. So anyway, I'm not somebody who's gonna give you the BS context. So how about we get straight to the facts? So first, I want to identify my market structure and my key levels on a higher time frame. I know that the market is most likely to be bullish. Why? We have just swept a higher time frame key level, previous week low. We have a 1 hour SMT at these lows as well, and the market seems to be respecting bullish structure. Why is that? First, we have currently a double bearish inversion right here, as you can see on the 15-minute, and on top of that, 15-minute fair value gaps are being created on our way up. We have another one right here that was just invalidated. So at this time, the only range that I'm focusing on, the only range that matters to me is going to be anything to the right of these, okay? Anything to my left is just going to be me identifying key levels of where we are most likely to have a reaction. So what am I waiting for at this time? At this time, on our way up, because this bullish rally, right, on the 15-minute, it looks bigger on the 1 minute. So I was identifying what key level aligns with that area. In this case, it was a 15-minute IFBG. At this time, I want to go to the 1 minute. I want to drop to the 1 minute, excuse me. And I want to measure this wave. Is this wave completed in terms of our going lower, or are we just temporarily retracing up like this to then continue going lower, right? Once again, you have to identify the market structure. We have already covered the key level plus the SMT, right? So I'm leaning towards both sides, more bullish than bearish. However, I still want to catch some form of bearish retracement because the market has to rebalance to equilibrium, take out lay buyers, and then continue going higher, right? The models that I teach you could play them on the same, on both the directions. So if I'm expecting a short, I'm either expecting a key level or waiting for reactions at a key level to catch either the full reversal or to catch a temporary retrace and then continue going higher. So both directions, mathematically and algorithmically, they both make sense. So let's start measuring this wave. How do we measure that wave? Standard deviation. Something that I was covering with my apprentice this week is that levels 2 and 2.5 are normally levels that the market retraces back into, have a temporary retrace, and then continue going lower. However, that is not all times the narrative that plays out. Once again, you have to identify the market maker model at play. What else do I want to use to measure this wave? In this case, I want to use my Fibonacci extension. Not that it no longer matters, but because we have already missed this move. So if you were catching, say, longs, this right here would have been your golden pocket. Why else? Let's measure equilibrium. Level 0.5. Now, normally my favorite setups are going to be at the level 0.618 and 0.786. However, it really depends on your style of trading because we have a lot of bullish narrative going on at this golden pocket. What other bullish narrative? Once again, identifying key levels on the higher time frame. This level is a change in state of delivery, something that I was also teaching to my apprentice in case you didn't know. Changes in state of delivery, especially on a higher time frame, are areas where the market likes to revisit. In this case, we broke through it, we distributed bullish, we retraced back into the 15-minute change in state of delivery, while also reaching for our golden pocket. So fine, right? We missed that setup. That's fine. I missed completely that setup, and I would have not taken it. I don't know if we had an S&T at these lows at that time. But now this no longer matters to me. I already know what happened. Actually, let me go back to having just the standard deviation pulled up. So now I measure this wave. I want to see how high this wave could potentially extend to. And hopefully, because the narrative behind it is we are inside of a 15-minute inversion fair value gap. I want to see some form of reaction. I want to see a bearish reaction to take out what? This low resistance liquidity on the longs, to then continue going higher or catch the full reversal. Either way, they both make sense. What else do I want to measure? I want to measure the equilibrium of this current range. Because once again, we already missed this setup, so anything to the left of this no longer matters to me. The current developing wave that I'm trying to measure is this one right here, aligned with the kilos to my left. But in terms of market structure, what I'm currently reading, this is the wave that I'm currently reading. So what else do I measure with that? Standard deviation, right? The same tools that I use in every single one of my setups. So standard deviation, it's gonna go right here. Now where's my Fibonacci extension going to go? Because market structure really isn't that clear on this consolidation, right? So I'm not going to worry about the Fibonacci extension just because it is not as clear. Even if I go, let me see if I can go to the 5-minute and see what that aligns with. In that case, I don't have anything clear. I mean, you could say this right here. Normally this is how you measure Fibonacci extensions. So realistically, if you're on a bullish side, these right here, it makes sense. Targeting a swing trade all the way up here, sure, you could do that. But I'm trying to catch a small retracement, right? So let's focus on the 1 minute for now. In order for me to attach my Fib extension, I'm going to look for the first swing low generated afterwards, right? So in this case, same narrative Fib extension. We go from here to the first candle that broke these opposite candles. In this case, it will be this one. Back to the retracement. So now I see what aligns with that. Let me move the equilibrium out of the way so that it doesn't overlap. Now I start seeing the golden pockets for this range. What are my golden pockets? The golden pockets are not the perfectly alignment, meaning that 4.5 doesn't have to necessarily align perfectly with 4.236 or equilibrium. It's just the levels that are near each other. Therefore, that is my golden pocket. And me being the algorithmic nerd that I am, I like to look for every single confluence that I like that aligns with this narrative. In this case, on the 4-hour, I identified this order block, right? So this bearish 4-hour engulfed this candle. Therefore, that is a 4-hour order block. So I'm not going to draw the entire thing. However, what am I going to do? What did I do at this time? I measured the equilibrium of the order block. In this case, I did from wick to candle. Sorry, I use just the candle body, the measurement of that candle. And then I moved it to my left to see where that lands. Now let's go back to the 1 minute. The equilibrium for the order block, 0.5, it aligns with, it doesn't perfectly align, but it's around the same area of my golden pocket, right? But that's just too much noise. It's just something that I'm aware of and something that is there. Let me erase this right here. So perfect. What am I waiting at this time? At this time, I'm either waiting for an external SMT, an internal SMT, or this right here. I'm waiting for market structure to finish developing. And then right here on the 1 minute, one of my favorite entries is going to be an inversion fair value gap on the 1 minute, plus a 1 minute change in the state of delivery. I'm anticipating the move playing out that way. This is going to be your high probability entries. Or once again, you align my system with whatever aligns with your system. That is the whole point of these videos. For you to build your own edge based around my high probability system, right? So this is what my entry is going to consist of. So at this time, I wait for the market to develop. So what do we got going on here? I have a 1 minute inversion, IFBG, plus a change in the state of delivery. What else happened at the top? At the top, we have what in candle patterns you call an evening star candle pattern. So I have 3 confluences aligned with my entry narrative. On top of that, we are inside of our golden pocket. We have already established that. At this time, I believe that we had no external SMTs. We had an SMT with one of these swing lows, meaning that ES was the weaker asset and NASDAQ was trading stronger, meaning that we swept one of these pivot points. But you know, that's not happening at a key level, meaning that the SMT is not happening at any key level. In this case, it would have been the current Asia high key level, which is an external buy side liquidity. However, I'm going to focus once again on just the confluences that I got going on. So at this time, I took my entry right there. I took a sell. Stop loss goes at the protected high. Now, what is my target? If I'm expecting the market to either fully reverse from this area or just have a temporary retrace, take out this sell side liquidity and then continue going higher, I'm going to project where this yet to develop wave could potentially extend to. So I attach my standard deviation there. Realistically, you could target just 2.5 because that would align with the narrative of just catching the small retracement before continue going higher, because once again, what is level 2.5? A level that we hit at a temporary retracement, meaning that the market reaches for it, we temporarily retrace in the opposite direction, and then we continue going lower. In this case, me personally, I always target level 4 and 4.5 if it aligns with liquidity. In this case, what level aligns with liquidity? My nearest liquidity to levels 4 or 4.5 is this right here, this sell side. Therefore, I'm not going to be greedy. I'm going to target level 4. What else aligns with this narrative? Equilibrium of this range. The market has to rebalance to the new range it has just developed. Therefore, my equilibrium is drawn from the swing low to the current peak high. I don't know if this is the peak high, but based on the market structure happening currently, that is my peak high. So now what aligns with that? Level 0.618. That's a perfect entry for me, and that's a perfect target for me. So now I just let the market play out. At this time, momentum was dying because Asia had just closed and London had just opened. A lot of people say that a London open, it's anywhere from 2 a.m. or 3 a.m. Eastern time. Me personally, I consider midnight open the London open. Okay, even if the market opens at 2 a.m., then I rather consider midnight open the London open, just like New York pre-market open, you know, which is 9:30. Anyway. So because momentum was dying, I was still expecting the algorithm to deliver algorithmic price action. So at this time, I throw my stops at this swing high right here. Not this one, sorry. Why? Because I'm seeing a temporary consolidation, not going anywhere. So I'm expecting the market to want to retrace a little higher. Not as high though, because once again, this is just the algorithm delivering price. Not as aggressive as if smart money was actually active at this time, you know, because midnight has just opened. So we have small buy side liquidity right here, and we also have small buy side liquidity right here. So if I want the market to continue going lower, I'm expecting in either one of these levels to get swept and then continue going lower towards my actual target, right? In this case, we didn't. The new range that the market developed as consolidation to then sweep that liquidity and then continue going lower is this right here, this pivot point. That is the buy side liquidity that the market took out. And on top of that, bearish narrative aligning. First, you have to look at market structure. Bearish fair value gap right here. Bullish fair value gap right here. Actually, no, that's not a bullish fair value gap. I thought it was. But this candle alone engulfed these two candles. Therefore, the bearish narrative is holding. And on top of that, look at the multiple changes in state of delivery happening. That's a one change in the state. That's another change in the state. So after this change in the state happens, that's when I trail my stops even more aggressively. Right here. And I took this trade on both the funded, which is where I have my technical analysis going on, where I had it going on at the time. So at this time, I'm expecting this change in the state to hold. So that way I can start trailing my stops even more aggressively and maximize the amount of profit that I actually make. Because 288, it could be enough for some people, but me personally, you know, I'm targeting anywhere from $400 to $600 every single trade on the funded accounts. On my live, you know, I'm trading micros, mini contracts, not micros. I'm trading e-minis, regular e-minis. So my profits are just way bigger on that. So at that time, I got stopped for full profit. So now let's actually start analyzing the market maker model currently in play. Okay, so in order for you to start aligning what's actually going on together, you have to look at everything. What do I mean by everything? Right now, we don't know what's going to happen, right? Even I don't remember what's going to happen. So level 2 and 2.5. Once again, I erased everything that we're looking at to minimize the noise. The only range that matters to me now is anything, once again, to the right of this. These are my two major currently developing waves. We had the temporary retracement. Oh, excuse me. We had the temporary retracement into levels 2.5. We retraced from there into the old and golden pockets into this current level. What are my golden pockets? In this case, I should have not erased them. It's my bad. Right here. Let's just use standard deviation for now and equilibrium. Now this range, this is a specific range, is yet to be determined. Why is that? Because we don't know if the market is going to respect this equilibrium level or continue going lower. Into what? Into what? The actual reversal standard deviation levels, either this or the here. I know this is a golden pocket. Why? Because I can see my equilibrium range. The overall equilibrium range, it's from this swing low to that current high. That's why it's a golden pocket. So I'm tracking both sides of the market at the same time, aligning with the narrative of, okay, what is the actual market maker model in here? On a higher time frame, without us having to go to the 50-minute, you know damn well that this is just a sideways consolidation. The market's not going anywhere. It's trapped within this range. So realistically, what do we do in a consolidation? If we're bullish, it makes sense for us to sweep the consolidations, sell side liquidity, right? If we want to continue going higher. In this case, where is sell side liquidity? It's all the way down here. And at this time, I remember what liquidity haven't we swept yet? All of this low resistance. There is even more low resistance all the way down here. Are we going to go all the way down here though? We don't know that yet. So let's look at the aftermath and let's look at how golden ratios can be invalidated by market maker models. Because once again, technical analysis, it doesn't make sense if it doesn't align with the narrative of the market maker model. If it doesn't align with the market maker model, then you're just guessing based on confluences. In this case, every single thing that I tell you right here, it made sense because I'm talking to you about temporary retracements, take out this sell side liquidity, continue going higher or continue going lower. I told you at the very beginning of this video, this could either be, I'm catching on the short side, I'm either catching the short-term retracement or the full reversal. It has to come together with the market maker model. That's the whole point. So now let me draw my Fibonacci retracement for this current developing wave. It'll be right here. This range of equilibrium is for this range specifically. This range of equilibrium is for the overall entire range, okay? But you can start seeing how the market, especially in a consolidation, the market respects algorithmic mathematical levels, okay? By math, I mean Fibonacci, okay? Fibonacci is literally math, algorithmic math. Now let's see what happens. Now, before we do that, let's identify my golden ratios, my golden pockets, sorry. This right here will be a golden pocket because it's aligned with equilibrium. And, well, if we reach for 4.236, that would invalidate this range of equilibrium. So hopefully, we will respect it, right? This right here. Golden pocket. Is that really a golden pocket, though? Because I only have equilibrium and standard deviation aligned with that. I don't have a fib extension aligned with that, unless I move this all the way up here, you know. But me personally, I'm starting to like trading the fib retracement, the fib extension like this. You can trade it both ways though. Realistically, it's not really that far from each other. So yes, you could consider that a golden pocket. But is it going to hold? Is it going to align? We don't know that yet. Let's wait for the market to retrace there. Right now I have an unconfirmed SMT. I have a double SMT sequence. I have it between these lows and these lows right here. Let's see what happens. That golden pocket seems weak. That golden pocket didn't hold. Where's my next golden pocket? My next golden pocket's right here. These levels are near each other. That's a preference of golden pocket for me. Golden pocket. Equilibrium level 0.786. 4, 6.854 align with each other. And I believe the 50-minute changing state happened somewhere around this area. So there you go. You have now those two levels aligned together. Now is that going to hold? This one didn't hold. Perfect. Equilibrium range doesn't matter anymore. Now we see if this was just a temporary retrace back into this sell side liquidity to then continue going higher, or we caught the full reversal. We see. Golden pocket has been hit. I have no 15-minute bullish fair value gap, however, though. So one of my higher time frame confluences is missing. Therefore, is that high probability? It's not. No 15-minute fair value gap. No higher time frame fair value gap at all. Golden pocket is not holding. Seems to be. Now let's see. We're having a small bullish reaction. But once again, what's missing here? First, no SMT, no higher time frame fair value gap, no higher time frame key level, because my changes in sale delivery were all the way up here, if you remember correctly, because I know the market revisited this levels right here. The 15 minutes have now been broken. They no longer matter to me because clearly the market is not respecting bullish narrative. If the market was actually bullish, then we would be respecting the 50-minute change in the state that was marked right here and right here. Instead, we're respecting bearish narrative. Look at all these bearish 50-minute fair value gaps. Now let's look at this current wave. This looks like a wave that could be measured. But once again, what didn't you have in here? Let's say you wanted to take an entry at this golden pocket, right? This move clearly was a fake out. Why? First, I have no 1 minute invalidation. Sure, I have a 1 minute change in the state, and then the invalidation happened right here. Now let's say you would have taken that trade, right? At the invalidation right here. Does this risk to reward ratio make sense to you? To have that big of a stop loss to target opposite liquidity, which in this case, once again, it would be right here. That's nearly a 2R. That to me is not enough. But you know, it all depends on your style of trading. Let's look at the same golden pocket area. The 1 minute inversion didn't happen at the golden pocket. It happened, I mean, it happened at the golden pocket, but I would rather for it to happen all the way at these lows right here. Plus the change in the state. Right now, the market looks like it's consolidating. It's not really providing me any clear leg of structure. 1 minute invalidation, 1 minute invalidation. Into what? We know that this is buy side liquidity. Buy side liquidity. Buy side liquidity. Into what? Into what? The overall equilibrium of the current range. 0.5 level has been hit, so the market has rebalanced to 0.5. Now let's track this current wave, right? That's what we're going to do. Standard deviation. We have hit level 2. Once again, level 2s are normally hit when the market wants to have a temporary retrace. In this case though, you would be following the overall market maker model that is currently in play. If you want to see a bullish reversal, you want to see bearish narrative get disrespected. In this case, to me, it looks like the bearish narrative is winning. Look at the multiple bearish fair value gaps that we have been generating on our way down. And I have no higher time frame confluence, no higher time frame 15-minute fair value gaps down here. Therefore, is this area really going to hold? To me personally, I don't think so. And on top of that, what did we say earlier? If this is a consolidation, which it is, and the market wants to continue going higher, it has to sweep this entire consolidation sell side liquidity. Therefore, your golden pockets in this scenario, to me, they are low probability. You wouldn't trade that. Once again, no SMT, no higher time frame key level, no higher time frame fair value gap. The only thing that you have aligning with each other is the extension levels and the equilibrium. That is not high probability. The market maker model, to me, seems like the sellers are winning currently. We're having this accumulation get swept. So once again, market maker model inside of market maker model. That accumulation was getting swept on the opposite side, meaning that we swept the buy side liquidity of that accumulation, right? Let's see what happens afterwards. So that's the complexity of your system. What's the complexity behind it? It doesn't matter how many golden pockets you have aligned with each other. If it doesn't align with an S&T, a higher time frame fair value gap, a higher time frame key level, and on top of that, it doesn't, most importantly, it doesn't align with the market maker model currently at play, they don't matter. Okay? In this case, mathematically it matters. At this level, it makes sense for us to have a temporary retrace down, or the full reversal. I told you at the very beginning of this video. Okay. Let's erase all of this, shall we? Perfect. So what's going on now? Let's look at the facts. What is the wave that I'm currently trying to measure? This wave. Fibonacci extension goes there. Standard deviation goes there as well. My overall range of equilibrium is where? From this swing to that swing low. Four-hour fair value gap. I'm looking to take a trade. If anything, the higher time frame fair value gap. If you want to simplify where you should be taking trades, take it at a fair value gap, bro. I always wait for a fair value gap to get filled, and then I watch for the reaction that I'm looking for. Now, am I only going to use this wave alone for me to, expect the reactions? No. How do we use standard deviations and Fibonacci extensions? You measure the current, any swing low that swept sell side liquidity, such as, it could be these. Realistically, it could be these, and this one right here. In this case, because this one happens to be a key level, meaning that this is a New York pre-market low and London low as well. I'm going to measure that. So I go to the 1 minute. Oops. Standard deviation. Now Fibonacci extension. So now I'll see what else is aligning with that. By the way, for those who don't know, this New York low is not a key level. Why? Because New York is currently developing. Therefore, this level, once it's broken, then a new New York low would be generated. The ones that matter to you, if you're trading New York session, is New York pre-market low, pre-market open low, in other words. Okay? So what do I got going on? I have an SMT on the 1 hour. I also have an SMT on the 50-minute right here. So I have a double sequence SMT aligning with what? My golden pocket. Where's my golden pocket in this case? Realistically, because I'm tracking this wave, the golden pocket that I'll be expecting a reaction at. Damn it. Right here, there you go. Golden pocket. Let me save that as a preset. Golden pocket. So I'm not going to trade based along on this. Sure, you know, we hit level 4 and then the market is not really doing anything. I mean, we had the reaction of let's retrace lower a little bit, take out low resistance liquidity, and then continue going higher, right? Sure. Would I've traded that? No. So what else am I waiting for at this time? This golden pocket would align with the equilibrium level 0.786. I might as well measure this wave, which happens to land around Asia low. So would you measure this one or would you measure this one? I would measure this one, personally. Asia low, because that's the key level. We're not attached to any key levels. However, Asia low happens to be the major swing low that swept sell side, and then we continue going back bullish. So standard deviation goes here. Fibonacci extension would go the first one high that broke opposite structure. Now, are you always going to be tracking all of these together? No. However, I'm showing you the complexity behind a system for you to then start simplifying it with your own personal system. You know, just because a system has proven to work, it does not mean that it cannot be improved. What does that mean? Go ahead and improve it. Go ahead and simplify it with whatever actually makes sense to you. Once again, I already covered that. Me personally, I like to track everything. I like to track every single algorithmic level that I could potentially expect a reaction at. But I simplify them with just golden pockets, SMTs, fair value gaps. That's it. And liquidity, of course, liquidity. Liquidity is the most important thing. Fair value gaps are liquidity though, so there you go. So what do I got going on in this case? 17.944 aligns with, what did I tell you? That means that the wave could potentially end there. In this case, this wave. That aligns with what? My golden pocket area. The golden pocket is right here in case you can't see it. Equilibrium. Peak of the wave. Golden pocket. So at this time, I'm not going to take any trades. I'm going to wait for my golden pockets to get hit. I'm not interested in taking any positions right now. Even if the market provides me with a clean setup, it's not aligning with my system, therefore I don't take it. I'm not going to chase a trade. 6.5 has been hit, therefore the standard deviation for this wave no longer matters. The ones that I should be focusing on is this two right here. As long as that aligns with the narrative of the market maker model at play. What is the narrative of the market maker model at play? Let's go to the 15-minute. Let's zoom out, in other words. I have low resistance liquidity right here. We have just done what? we swept the sideways accumulation that we identified earlier and that we were trading yesterday. We manipulated the sell side. What do we do after an accumulation happens? We manipulate it and then now we distribute. And this is a higher time frame market structure. We also reached for this low resistance liquidity, plus a 1 hour SMT at this time. So now the market maker model is aligning with the confluence of maybe this is the bullish reversal. So remember, my system consists of either catching the full reversal or catching a temporary retrace to then continue going higher. Mathematically, both moves make sense. But in order for me to do that, I need to identify a high probability area. In this case, is my golden pocket. So let's see what happens afterwards. Let me mark out 9:30 before I mess it up. Okay, 9:30 is about to open. Perfect. Okay. Accumulation, manipulation, distribution. Market maker model inside of market maker model. Golden pockets are about to be hit. Level 6 has been hit. Now, am I expecting a move right away? No. Why? Because I know, first of all, New York has been trading like trash lately. Therefore, this major move already happening at market open is telling me that perhaps the volume is going to die for a little bit before it actually provides me with the actual move. Okay? So I'm not interested in taking any trades right now. Plus, level 6, I would like to see level 6.5 get hit, to be honest with you. Perfect. Now what am I waiting for? I'm waiting for the market structure to finish actually developing a high probability area in terms of entries. What did I tell you in the previous setup that I'm waiting for? I'm waiting for a 1 minute inversion plus a change in the state happening near the same area, okay? Plus, if you want to add the evening star candle pattern, then go ahead, be my guest. You know, it's just a matter of narrative aligning with narrative. Remember that we have equilibrium level right here, 0.786 with that golden pocket. That's why it's a golden pocket, okay? Level 17.944 has been hit, meaning that this wave could potentially end right here. But the overall wave that we're tracking, which is the one all the way down here, is telling me that the market and the standard deviation as well, the golden pocket for that overall wave would be up here. All the way up there. Aligned with what? This wave's fib extension, 6.854. Aligned with what? 15-minute fair value gap. So that's your next golden pocket. So what is this telling me now? That this is most likely, we're most likely, if I'm expecting a bearish retracement, it's going to be that, a retracement, nothing else. So now I wait for the market to provide me with the entry that I'm looking for. Would that be my entry? It could be, but it's still too early into market open. It's just 18 minutes after market open. I wouldn't be interested on that. It's happening too early, you know. Sure, if I miss the move, then I'll just play to the bullish side. But right now, once again, remember, the major move just happened at market open. New York has been trading like trash. This is most likely a trap. This is most likely a consolidation. And then probably 10 o'clock is going to provide me with the actual setup. So I wouldn't take a trade just now. Just yet, sorry. Excuse my language. Perfect, as you can see, that was a trap. It's about to be 10 o'clock. The 4-hour fair value gap, it's about to get invalidated, the one that was right here. Now the 10 o'clock volatility is most likely to be expected. So what am I seeing? I'm seeing the bullish momentum dying. The golden pocket has been broken, but I'm still expecting the same reaction. Plus, we have a 1 hour SMT, meaning that Nasdaq is the stronger asset. Okay? And we have just reached another 15-minute fair value gap. Where's my low resistance liquidity in this scenario? In this case, my low resistance would be all of that you're seeing, all the way from here to here. That's my low resistance liquidity. I believe that this was a move to trap the longs so that the market can in fact retrace bearish and then continue going towards the actual golden pocket. Okay, at this time, because I have no bullish fair value gap, I mean, you can look at this as a smart money concept of sell side buy side imbalance when 2 wicks overlap with each other like that. I believe that you guys call that CV, something like that. Sell side imbalance, buy side imbalance. But what did I see at this time? I'm changing the state. That to me was my entry, I believe. And if it wasn't, it makes sense with what I'm looking at, because it aligns with everything that I'm looking for. Fair value gap, SMT, golden ratios being hit. Why wouldn't I take that? It aligns with my system. If I'm wrong, then I'm wrong. But does it also align with the market maker model? Yes, it aligns with it. Why? Because even though we're bullish, I'm catching a small retracement to sweep these liquidities, sell side liquidity, and then continue going higher. And also, if you are struggling with identifying overall market maker models, you can just pull them into my indicator. Just pull my indicator. You can either look at the daily cycle or the weekly cycle. It all depends on what you're looking at. This one is on the daily accumulation manipulation. So on the daily, is this enough for me? No. So the daily, it's not aligning with my system right now. In order for you to minimize noise, it does align, but I'm not gonna go into too much detail into market maker models right now. So let me go to my smaller time frame, market maker model. We manipulated the accumulation. Now we're distributing. So if we're distributing, the time frames that I got currently are, we distribute from 7 to 1 p.m. Eastern time. Therefore, this is a small retracement in the overall bullish distribution. Okay. So yes, it aligns with the narrative of the market maker model. Right here, I was trailing my stops. I will trail my stops right here. Actually, they will be more aggressive just because I'm already more than enough up in profit. But for the sake of this video, let's put it right here actually. Let's put it at the change in the state actually. If I get stopped out, then that's fine with me. But I want to see the momentum continue. Okay, I got stopped right there. Damn. Dude, that happens all the time. I get stopped for profit, and then the market then continues to sell off. But that's fine. Why? Because on the live account, I was able to secure, I believe this was a, how much was that on my live? Another 4,000. And then I didn't take this on the funded account because I had already requested a payout and I didn't want to trade on Thursday price action. I believe this is Thursday, right? Yep. Now, something I forgot. My standard deviation for that wave. I was trying to measure my targets, right? So realistically, dude, it's so good. Realistically, my target would have been level 4, right? And then I moved my stops. I didn't know this at the time, by the way. My stops were at the change in the state. I got stopped at the change in the state. Realistically, I would have exited right here though, because I'm following my system like that. In this case, we hit level 6.5. We retrace all the way down there. Now let's look at my fifth extension. Golden pockets hit. Golden pockets hit. Is this a golden pocket? Yes. Why? 15-minute bullish fair value gap. What else? What's my overall range of equilibrium in this case? This right here, from London low to here, because that is the major swing low and the major swing high in this range. Okay, nothing to the left of this matters to me. That's a golden pocket. That's a golden pocket right here. So if you're looking for longs, considering the market maker model narrative of being bullish, what do we got going on in here? We have an inversion plus a 1 minute change in the state at about to be 10:30, so the 10 o'clock 4-hour candle. Could you take a buy right there? It depends on your system. Once again, me personally, let's see how a risk my risk will look like right now. That's way too much for me. Would I have entered there? I mean, if I want to risk nearly 2% of my account, then sure, you could have entered right there. Me personally, once again, my entries consist of the same thing. If I have an inversion, then I enter at the inversion. In this case, the change in the state was too far from the inversion, so my risk is maximized. Therefore, meaning that my risk is it's higher than what it is normally. So I'm expecting that to hold, right? Let's look at the facts once again. I'm going to project where that wave could potentially extend to. Level 2 is right there, aligned with that golden pocket. And level 4 is right there. Where would I target? I would target my higher time frame golden pocket. I would target level 6. If that aligns with liquidity. Does it align with liquidity? Let's zoom out to the 5-minute time frame and let's see if it does. It does. Why? We identified our low resistance liquidity earlier, which is right here. All of this is liquidity that the market, if bullish, we could potentially be seeking. Now let's see if that golden pocket holds, because the market maker model narrative aligns with the golden pocket narrative. Okay. On the previous example that I showed you, the golden pockets didn't align. In this case, are we missing something? I believe that we had an SMT right here at this lows at this time. Right now it's not showing because of my settings on the indicator. They are set to another time frame. You can change them, by the way, to whatever time frame you desire. Let's see if that holds. I'll throw my stops right here, just because bullish momentum seems to be dying. If we break higher, I'll change my stops right here. Would I maximize my profits at this time? I would, personally. I would put them right here. Why would I risk the market reversing on me at this time after waiting for 3 hours, bro? Bro, I would have never taken this trade. Because, or holding it for this long, bro. I would have never done that. But you know, once again, maybe that is your style of trading. Me, I'm a scalper, bro. I'm a scalper, alright? I admit it. I got stopped for not full profit, but nearly full profit. Okay. Let's see what happens afterwards. Let me go to the 5-minute for this to go faster. Holy. You see? Imagine I would have put my stop loss like right here. I would have secured like $300, bro. I waited 3 hours, bro, just for the market to stop me out for $300 instead of me maximizing my profits. This is why I teach you guys to trail your stops aggressively. Why risk the market reversing on you, you know? Because let's be honest, regardless of how specific I am on everything that I teach you, and regardless of how specific I am to myself in terms of what I'm looking at, nobody's going to really catch the market 100%. I mean, maybe you guys, some of you are better pattern recognizers than I am, but you're never going to be catching moves 100%, you know. Even on my live trades, especially after trading manually, after 2.5 months of Claude doing everything for me, I've been a little rusty. I've been catching so many early entries that I get stopped out, but then the narrative that I'm looking for completely plays out. Also, on the 5 minute, at my initial entry, what did we have here? The evening star candle pattern, bro. Bro, I love this pattern right here. If it aligns with my narrative, though, and if it aligns with the market maker model, what? So, let's look at the recap. Everything that I marked aligned with the market maker model. Let me remind you, let me refresh your memory in case you're not paying attention. Your technical analysis doesn't matter if it doesn't align with the market maker model. In this case, I have completely automated that for you. There is no other time frame that gives you this level of accuracy, okay? Accumulation, manipulation, distribution. Now, is every time going to be accurate, meaning that we're going to sweep this accumulation, sell side liquidity? No. It's all a matter of aligning any form of sell side liquidity sweep. Okay, we probably had an SMT at this time. Let's go to ES and pull it up in there. Damn, I have to add the indicator. That's fine. Let me see if I can find that area. Okay. The accumulation seems more significant right here on ES. You see why? We sweep this sell side. We manipulated that sell side. Nasdaq in this case was the stronger asset. Yes, sir, it was. Now we're distributing. This indicator is the most important tool that you can get. Okay, in case you're struggling with market maker models, then you have something completely automated for you to start aligning your system with market makers. That's the whole point of this golden pockets. The golden pockets that I showed you on the previous example, they didn't hold because they were not aligned with, first of all, no SMTs and no fair value gaps. The most important things on higher time frames is that. In this case, we did. Fair value gap right there. Inversion is happening on a golden pocket in which a fair value gap higher time frame is present. Now, let's look at another example of key level. Oh, excuse me. I bet you there's a 15-minute change in the state right there. There. This is amazing. Change in the state. What is a change in the state of delivery? Areas that the market likes to revisit and then reject from to continue in the direction it wants to go. Okay? And it's coming together with our golden pockets. Okay? This is the complexity behind the system. You go ahead and simplify into whatever it makes sense to you the most. Me personally, the more context I have, the better everything can be simplified. Because everything is simplified into the psychology of the market makers. Why do they want the market or most people to believe to then do the opposite of that? That's my style of trading. And then I backed that narrative of psychology with math. In other words, Fibonacci, okay? So that is it for this week's A+ setups in terms of golden pockets. I trade other setups. Once again, I have multiple ways of trading. But I'm going to teach you guys why you should actually be focusing on, which is the golden pockets. The alignment between liquidity, Fibonacci extensions, and SMTs, okay? I really hope that you guys enjoyed this video. Once again, if you're not in my Discord community, I share a lot of insights in there. I really think that a lot of people find them useful. I received this message the other day of this guy aligning his form of trading with my personal style of trading, and dude, that completely made my day because the guy shares his wins, and when he shares his wins, I can absolutely see what he's seeing without him having any type of drawings in his chart. Like I know exactly what the guy is looking at because that is my style of trading. And I'm so proud of seeing so many of you actually start improving from these videos. And that is the goal, you know. I became profitable in a year and 2 months. Why couldn't you guys do that? It's all a matter of the work that you're willing to put in, okay? If you're enjoying your weekends because you got sold the idea of, hey, on top of trading, you have to enjoy your personal life and all that, sure. But you have to sacrifice some of that, bro, for a while if you actually want to be successful in this business. Okay? Once again, I hope that you guys enjoyed this video. I'm going to continue to make videos. I love making videos. I love helping you guys. I love seeing you guys improve. Have a safe weekend. Much love.